So this is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from the topic Accounts from Incomplete Records, also known as Conversion into Double Entry, and from AS Accounting 9706. So let's start the question. This question has come in May-June 21-21. May-June 21-21. So let's start the question. Sween owns a small retail business. She has not maintained a full accounting records. State two reason why the owner of a small business may decide not to maintain full accounting records. Because maintaining accounting record is an expensive technique. You need to hire proper accountant, which will definitely cost you. You need to hire sometimes administration staff. Paper cost will be there also. So, and maybe the business is small that they don't need to hire another person. Maybe he's the only person who is engaged in the business, like a barber shop or like a dry cleaner business. So that's why they don't need to maintain full accounting records. Then it might require some legal requirement also. That will also be a little difficult task for a person, and it is time consuming also. Additional information is given. Sween has been informed that the accounting concept of matching and prudence must be followed. Explain how these accounting concepts are applied when a business prepares financial statement. So matching means that the expenses of a particular year will be matched with the income of the same period to find profit and loss of the business. If income is more than expense, we have profit. If expense is more than income, we have a loss. So matching and accrual concept goes side by side. But matching only talks about that expenses should be recorded in the period to which it relates, and it is compared with the income of the same period to find profit and loss. Accrual says that expenses are recorded in the period in which it is incurred, either it is paid or not. And income is recorded when it is earned, either it is received or not. So next is prudence concept. Prudence concept says that assets and profits should not be overstated and liabilities and losses should not be understated. It means that we should provide for all possible losses and anticipate no profits. Like if you expect that there is going to be a future loss, you will record that loss before the occurrence of that loss, according to prudence concept, like provision for doubtful debts, like depreciation. Another concept is this, that inventory is valued at cost or NRV, whichever is less. That is also according to prudence concept, that we are expecting a future loss of inventory and we will record that loss right now by decreasing the value of the inventory to NRV. Sween has provided the following information. On 1st August, the business assets and liabilities included fitting and equipment at valuation. At valuation means at carrying value, at net book value. Inventory is given, other payable, shop rent is given, other receivables, insurance is given. Other payable mean that is accrued shop rent, outstanding shop rent, owing. Other receivable means prepaid insurance. Yeah, insurance paid in advance. Trade payables are given. Summary of the bank is given, cash sales banked. That is basically cash banked. I told you that if some expenses are paid in cash from cash sales, we have to prepare cash account to find total cash sales. But here, cash sales banked is given. It means that there are some cash sales from which we have paid some expenses, and the remaining amount has been deposited into the bank, which is written over here with the name cash sales banked. Can be known as cash banked. So bank is debited and cash is going to be credited. Proceed from sale of equipment, net book value 490, and the asset has been sold for 550. So there is a profit of 60. So that will be added in gross profit. Payments, drawings, shop rent, general expenses, carriage inward, insurance, trade payable after deducting 2.5% cash discount, 46,800. Cash account, which we used to prepare, it is already given in the question. So balance brought down is given, balance carried down. Cash sales are given 96,000. See, out of this 96,000 of cash sales, we have deposited 79480 into the bank. It means the whole cash sales has not been paid into the bank. Only 79480 has been paid into the bank, and the remaining has been paid for wages, for the payment of wages, and for cash purchases, which is 1320. So cash account is already given. During the year ended 31st July, goods had been returned to supplier 1280. These are purchase return, and definitely it will come in purchase ledger control account and also subtracted from the purchases. All sales were made on cash basis. It means the cash sales are the sales, the total sales, because there is no trade receivable. So we don't need to prepare sale ledger control account to find credit sales. Suppliers were owed 4560. These are trade payables at the end. Inventory closing is given and fitting and equipment were valued at 15,860. So we need to prepare total purchases first, and then May, June 21 we have to prepare the statement of profit and loss also. So let's prepare the purchase ledger control account first. So here PLCA or whatever you may call it as. So we'll start from the balance brought down. I will write brought down over here. Here I'm going to write down, carry it down. Here I will write payment to trade payable, so the whole amount which has been paid to the trade payables. Then I can also write purchase return on the debit side. Discount received will also come on the debit side, but in this question they are not given. And the difference is going to be our credit purchases for which we are preparing the TE account of or purchase ledger control account. So the trade payables at the start are 3970 and trade payables at the end are 4560. So I'll write here 3970 and here I will write 4560. Now payment to trade payable that is given, trade payables 46,800. So these are the payment to trade payable 46,800, right? Purchase return is also given, I think so. Let me find it out. It is given here. Goods had been returned to supplier 1280. So supplier is going to be debited because of the purchase return. But here one thing is missing, which we have to find. And that is basically discount received. We have to find discount received. How we are going to find discount received? Let's talk on that. If we just look at the question, trade payables after deducting 2.5% discount is 46,800. It means that this 46,800 we have paid after subtracting 2.5%. So it means that this 46,800 is without discount. So this 46,800 is equal to 97.5% of total amount payable. This is going to be amount payable or amount paid. The total amount is going to be 46,800 divided by 97.5%, which is 0.975. So what is going to be the total amount before discount? We need to find the amount before discount, because after discount, after subtracting 2.5% of discount, we are having a payment of 46,800, which is equal to 97.5% of the total amount. The total amount is going to be 46,800. What happened? 46,800 divided by 0.975. So that is 48,000. Okay. So 48,000 is the amount out of which we are making the payment of 46,800. So if we subtract this amount from this, we'll get 1,200, which is the discount received. Always remember discount received will come on the debit side of PLCA, and it is also treated as an income. It will also add in gross profit, because accounting is based on due respect concept. Every transaction has two aspects, debit and credit. So let's go for the total of the debit side. That is 46,800. You can do that also. Plus 1280 plus 1,200 and plus 4560. That is 52,760. Okay. Let me check it again. 46,800 plus 1280 plus 4560. 53,480. Yeah. So 53,480 minus 3,970 is going to be our credit purchases. 5480 minus 3970, 4951. Oh, sorry. 49510. Okay. So this is how we are done with this. Next, we will move forward. We have calculated the purchases, but there are cash purchases also over here. 1320. Right? So the total purchases, which is the requirement of the question, is going to be credit purchases, which is 49510 plus cash purchases, which is 1320. So you can calculate the total purchases by adding both of the amount, cash purchases and credit purchases. Normally we don't have cash purchases. 50830 is the total purchases. Let's see what is the requirement of the next part of the question. Prepare the income statement, or you can call it a statement of profit and loss. We have to prepare. And then there is another part for the solution for this question. So let's solve it. We have to go for the statement of profit and loss. So I'm going to clear these drawings so that I can prepare the statement of profit and loss. Okay, I will write here the sign, dollar sign. Here I'm going to write the revenue. All sales are for cash basically. So cash sales are given. That is going to be how many cash sales are there. If you just look at over here, because we have been prepared, the cash account is already prepared. Otherwise, we would have prepared this account to find the amount of cash sales. I have given it in writing in my previous lectures where cash account is required to find the total amount of cash sales or any expense which is missing on the credit side. It is possible that cash sales are given, everything is given, cash banked is given, and wages is a missing expense. It is possible. Maybe the drawing is a missing expense which might come in the credit on the credit side. So 96,000 is my cash sales. I will write here. There is no sales return because all sales are for cash, and you can't return cash sales. Yes, you can't return cash purchases also. So less cost of sales. I will go with the opening inventory first, then add purchases, then less purchases return, then add carriage inward. I think it is given, and less closing inventory. You will not write abbreviation, you will go for the full labeling, otherwise marks will be deducted. So inventory opening is 11440. Purchases we have calculated already, 11440. Purchases we have calculated, that is 50830. Less purchase return, we know that is 1280. Yes, it needs to be subtracted again. It will come on the debit side of PLCA and will also be subtracted from purchases. Why, sir? Because of dual spec concept. Trade payable debit and purchase return credit. So account payable is going to be debited because of purchase return, but we have to credit purchase return by subtracting the amount from the purchases. So next is basically our carriage inward, and carriage inward is given, and that is 610. And then I will subtract the closing inventory. 610 will be added. And let's talk about the closing inventory. What is the amount of closing inventory? That is 18720. So I will subtract it, do the calculation. 18720. And then you will be able to find the cost of sales. And you can subtract the cost of sales from the sales to get your gross profit. And I will add discount received in gross profit and some other things also, if possible. 42880. So let me do it plus 50830 minus 1280 plus 610 and minus 18720. 42880. The gross profit is 53120. 53120. Add discount received. So discount received is we have calculated that is 1200. Maybe there is some other income. Yeah, there is another income, and that is profit on sale of. It was there. Profit on sale of. Let me see what was the amount. Profit on sale of equipment, and that is how much? 60. So 60 is the amount on profit on sale of equipment. So I will add 60 here. Now I can add it up. I will get the total amount of after gross profit 54380. Okay, now I will subtract less expenses. In expenses, we know that first of all we need to write discount allowed, but because sale ledger control account is not prepared, so there is no discount allowed. Then we will go for bad debts, that is also not here. Then we can write the wages. Wages are given, that is 15430. So I can write the wages. Don't miss the wages from the cash account, otherwise your question will go wrong, because wages expense is given, that is 15430. It is not given in the bank account, it is given in the cash account. Sometimes it happens that we are not able to record it, or forgot 15430. Okay. Next is going to be then shop rent. General expenses, let me write it down. That is going to be insurance. Okay. Insurance is here given. General expenses are 16810. Let me write it. General expenses 16810. Why I am writing both the expenses as it is? Because there is no opening and closing balance of expense account. If there are opening and closing balance of any expense or income, we have to prepare expense or income account to find the profit and loss statement figure. That would be the appropriate way to go for that, because it will also help you to prepare the T account. You will be able to know how to prepare the T account of an expense or income, and you will also be able to find the balancing figure, the missing expense, whatever you need to write. If you talk about fitting and equipment at valuation 18,500, no equipment has been purchased, no new equipment has been purchased, but there is a sale of equipment also. So let's, first of all, we need to prepare the shop rent account, other payable. So that is an expense. I will prepare here shop rent account. Let's do that. I will not go for the whole format because we are already knowing the format. On the debit side, I will write prepaid expenses. On credit, I will write prepaid brought down, prepaid carried down, accrued brought down, accrued carried down. Let's see. Shop rent, other payable. It means that shop rent accrued or shop rent owing is given, that is 510. Outstanding shop rent, which is a payable. So I will write here accrued brought down 510. Then at the end, if you look at the question, at the end, there is no accrued carried down is given in the question. So we can see that whatever amount has been paid for shop rent, that is 3580. The entry is shop rent to bank. So shop rent is going to be debited by 3580 because of bank. Okay. So I will take the difference of the two sides and I will get the profit and loss statement figure. Here it comes 3580. Will also come here 3580. And here is the profit and loss statement figure 3070. Now I can write here shop rent easily 3070. Next, I have to prepare the account of insurance. Insurance is given in the question, that is 2950. And insurance is given other receivables, that is known as prepaid. So prepaid at the end will be subtracted, but prepaid at the start will be added. It will be added in the, basically, the insurance expense, that is 2950 plus 290. I can write here 2950 plus 290, how much? 3240. Sir, I didn't understand why you add that. Okay, let's do it like that. Let's go for the preparation of account. Here I will write prepaid brought down, because prepaid brought down is given in advance. Prepaid expense is given, that is how much? 290. Then I will write the bank figure at the same side, which is 1950. So adding it up, we will get the profit and loss statement figure, which is 3240. Okay. Now I will going to write the depreciation on equipment. So for that, I have to prepare the equipment account. But this equipment account is going to be prepared through net book value, not by the cost method. Sir, how you will be able to find that this is a net book value method or cost method? If in the question cost is given, if in the question accumulated depreciation, provision for depreciation is given, you can consider it is a cost method. But here nothing is given, neither cost nor depreciation. So it is going to be a net book value method, which has a certain way to find depreciation. Revaluation method can also be known as net book value method. Brought down is given, carried down. On the debit side, I will write the addition. Addition means the purchase of new asset, if any, bank figure. And on the right side, I will write disposal, if any asset has been sold out. And the difference is going to be the depreciation. So what is the brought down of the fitting and equipment is 18,500. We will write here 18,500. There is no addition, but there is a disposal. You will write the net book value, not the sale proceed, not the cost. Net book value is going to be written over here, and that is going to be 490. Then I will write the carry down. So carry down is given here. Fitting and equipment 15860. So I will write here 15860. Let's go for the total of this. So we can go for the total of the expenses. I will subtract the expenses, and through this I will be able to know the profit for the year. So let me know the expenses first. 15430 plus 16810 plus 3070 plus 3240 plus 15860. 54410. If you will subtract 54410, you have a loss actually, right? So there is a loss of 30. Let me write, there is a loss for the year, and that is going to be 30 is going to be the loss for the year. Why? Because 54380 minus 54410, you can calculate it once again, total of the expenses. Let me do it for you together. 15430. Have I written the right amount of the wages? Let's see. 15430. What I've written? 15430 plus 16810 plus 3070 plus 3240 plus 15860. 54410 is the answer. 54380. Okay. So there is a loss of 30. So loss for the year we have calculated. The easy question is this, not very tough. May, June 21-21, calculate the total purchases, prepare the income statement. Now we will move forward. Addition information is given. Spain has the opportunity to move her business by a business to a busier location. So the following information is available because he's having a loss. That is the reason. The rent of the new shop premises will be 3 times the current annual charge. Current annual charge, not the current annual payment we have paid for the rent. That is very important point. Current annual charge is 3070, not the rent paid. So he said that it will become 3070 into 3 times the annual current charge. The rent of new shop premises will increase. It will become 9210. Okay. Next, annual sales could be increased by 10% on the figure for the year ended 31st July 2020. So whatever be the annual figure for the sales, that is 96,000, because all sales are on cash. So that will increase by 10%. So 96,000 plus 9,600. How much it is going to be? 105. Okay. 105,600. So this is going to be the new sales. She intends to achieve a gross margin of 60%. Now she believes that she will achieve a gross margin of 60%. Gross margin means margin is always applied on the amount of sales. Sales are now given 105,600 multiplied by 60%. We will get the gross profit. That is 63360. I can find the cost of sales also. Sales minus 63360 gross profit. I will get the cost of sales also. She will need to apply for a bank loan, 16,000 at 8% per annum interest to cover the cost of changing location. The loan will be repayable over a 2-year period, right? So loan is supposed to be paid over a 2-year period. It means that Out of 16,000, 8,000 of the loan is a current liability, and the remaining 8,000 is a non-current liability. Why, sir? Because half of the loan is supposed to be paid in the next year. So that is treated as a current liability. And remaining half is paid next year, then it is a non-current liability. So we'll calculate the interest on loan, which is an expense 16,000 into 8% for the whole year. That is 1280. Obviously, next year we have to pay interest again. Discount receipt will no longer be available. So now there is not going to be any discount receipt. Means we have to pay the whole amount of 48,000. Let's see. I want to make you understand something. Even if you are making the whole amount with the trade payables, the payment will be 48,000. There is no change in the payment side, right? Because discount received is written separately. If we are making the full payment, payment will still be 48,000. So there is no difference on the debit side. But discount received will not be added over here now with 1200 because there is no discount received available to us. Okay. Next, all other expenses will remain unchanged and there will be no source of additional income. There is no change at all. Calculate how much profit per annum will be made if SWIM moves her business to the new location, revise gross profit and revise profit for the year. So revise gross profit we have already calculated. That is 63360. So let me calculate it now. I'll do here 63360. Then revise gross profit we have calculated. There is no discount received. Profit on sale of equipment will be there. You have to write the profit on sale of equipment. 60 will be added. Okay. Then wages. Is there any change in wages? No. There is no change in wages. There is no change in general expenses. There is no change in shop rent. I think somehow or other he has said about shop rent has increased 3 times, right? So shop rent has increased by 3 times. So let me write again. One bracket use कर लेता हूँ 15430 negative, then 16810 negative, then 3070 into 3, that is 9210, right? That is again negative. Then 3240 is the insurance, which will be subtracted as it is because there is no change. There is no change in depreciation also 15860. So now you can calculate the profit for the year. I didn't calculate depreciation. Have you calculated? Why did you prepare the full account? Wait, just a minute. Just a minute. What has happened? Let me check. That's why we are having a loss. Fitting and equipment is 15860. Okay. Here I have to write the carry down 15860. There is no addition. I will take the total of the debit side. I will subtract the credit side. Then I will get the depreciation. How much is the depreciation then? 18,500. You didn't tell me that we didn't complete the account. 18,500. I think we have subtracted 15860 directly. We have written depreciation 15860. How come? You have to prepare the account. That is wrong. Depreciation is not that much. So there will be profit obviously. वही तो समझ नहीं आ रही थी कि कैसे हमने कर लिया. कितनी डेप्रिसिएशन निकालें हम? क्या आ रही डेप्रिसिएशन? 18,500. होगा बस 2150. So 2150 is going to be the depreciation. I will write in the asset account also, and I will write over here 2150. Now you can go for the total of expenses. No, other things will remain the same. Don't worry that we have done question wrong. No, nothing has happened. Only the depreciation amount we have written wrongly, the carried down balance of the equipment account. Now I have corrected, and we'll go for the total expenses. That is 40,700, and then we can calculate the profit for the year. Other things will remain the same because the change which we are going for 13860 is the profit for the 680 is the profit for the year. Other things will remain the same, like this gross profit is okay. At 60 is okay. all these expenses is supposed to be subtracted, it's fine. And also we'll subtract 2150, the depreciation, to find the correct profit. Now, with the change in sales and with the change in the gross margin, the new profit will obviously change. So we are going to calculate the new profit accordingly, that after gross profit at 60 and subtracting all expenses, 3 times the shop rent also. See, this is given in the question. Revised gross profit and revised profit for the year. 4 marks are there for that. So the new profit is 16580. So profit has been increased by somehow or the other. How much profit has increased? Hello, 16580 minus 13680. The difference. Yes, please. 16580 minus 13680. So with 2900 से profit आपका increase कर जाएगा. So with the changes in the expenses and in sales and in gross profit margin, the profit will increase by 2900. This is how we are done with the question. Advise Sween whether or not she should change her business location. Justify answer by considering both financial and non-financial factors. If we talk about financial factor, that is fine because we are getting a higher profit, but our gross margin has also increased. Even our sales has increased also but because our expenses, and we have to go for a bank loan. So taking a bank loan definitely is risky because it's a non-current liability. We have to pay the bank loan. Interest cost will definitely decrease profit, but still our profit is higher. Even with the interest cost, I think we haven't subtracted the interest cost from the expenses, right? Kitni? 1, 2, 3, 1, 2, 1280. So you need to subtract that also. Even then the profit will be higher. 16580 minus 1280, 16. No. Profit. 16580 minus 1280. 15300. So profit will be still higher. 13680 and 15300. Profit is still higher in the second option. But the problem is this, that the interest cost, the non-current liability has to be paid back. That is a problem. Then the rent can increase more in the next few years because it depends upon the relationship. Either the supplier will be able to supply the supplies at new location, okay, or he will charge more for the delivery cost because of the new location, right? And sales will increase, that is fine. These things, discount receipt will also be no longer required. That is the main reason the supplier is not happy because he's not willing to give us the discount receipt. But overall profit will increase. So our relationship with the supplier might affect. This is how you will take the decision that we will still go for the change because profit is increasing. And if you just see that our gross profit margin might have also increased. Let me see. What was the gross profit margin in the past? Calculated 53120